Hi, welcome to the market alert for Wednesday the 10th of May 2017. So yesterday again we're seeing the same problem, lack of volatility, and I might as well just whiz through all of this. I was looking, you see that I was switching between the daily chart. Just go back a bit to there, you'll see the daily chart come up in a second. Just having a look, see where things were in relation to what we were getting, and you'll see in just a second we had this signal here wasn't filled. Whoops, wrong one again. Let's get rid of that. Try that one. This one wasn't filled, and then you'll see this one not being filled in a moment, and that's a big enough clue that there's no momentum. You can see how narrow the range is as well. You know, it's barely 30 points. Then we get a buy signal that was filled. That was because of the factory orders. If I can just wind this back just a little bit. Trouble is, there's so much data in this video that it just takes a moment to. I'm just having a look at the VIX there, just as if there's any momentum. And then we see the market being filled. Prices start to move higher because of the news. And there's the news. You'll see me just check, have a look, see what the figures were. They came out slightly higher, same as the previous, so nothing to drive the market to the upside there. And then eventually we see the market coming back. You can see there, watch the selling increase there, and then the market just moves to the downside once again. If you were in this, you had the chance, based upon the lack of volatility and what you're seeing here, that the market wasn't going to go anywhere, and then moving down, and then the rest of the session until we got to the evening we see the markets moving lower, and that's because of the so-called comments that were made by North Korea. You'll see that in just a second, again sideways, and then we get a drop down there, and then the market starts to come back. But then when it reopens, you can see how it actually gaps down there as well. There is weakness around. The market wants to go down, but we've still got this central bank intervention in the volatility. So let's just have a look at that in more detail. So as you would expect, all the news is to do with volatility. It's I've never seen so much. It's amazing. Like I said before, 1994 I uncovered the sort of secret, as it were, behind implied volatility, and when it goes to all-time lows you get a major move. You can't pinpoint the date, but you are forewarned, as it were. So we've got a situation here where now the news is just being dominated by all of the news regarding volatility. There you can see there, back below 20,000 amid VIX chaos. There was no VIX chaos, as you will see in just a moment. Again, even Deutsche Bank now. Deutsche Bank are on the case, saying Vol be crazy. Deutsche wants to know when the insanity will end. Well, join the club. We're all asking the same question at the moment, and SocGen, beware of the ghost of 1993, which again goes back to look at these sorts of levels. And the reason 1993 is mentioned is because of this. So let me just show you. If you have a look at a VIX long-term chart, you will see that we've got 1993 over here, which was 8.86, and then we've got 9.56 where the market was yesterday. We can all see what happened at 2007, so we're back in these levels, and there's no doubts about it. We are going to see a massive correction from this. It's just a matter of when the central banks will actually take off the brakes and allow it to actually happen. That's all it's about, really. It will. No doubts about it. Also, notice down here as well from 2010 how the volume in the VIX has been used to actually keep volatility low, and therefore risk low, and the stock market moving to the highs, which again we've seen. If I just bring up a Dow chart here, monthly chart, then you'll see exactly what I'm on about. There you have it from 2009. Again, we've still got this situation where we've got huge volume there starting the rise in the Dow. We've got the last 9 years of the market moving higher, but it's only here that we're now, which I've covered many times before, about the institutions coming out of the markets. You can see there this massive spike in volume. It's not new buying at all. It is what's known as the distribution phase. Again, the institutions can get out, but until you stop the central bank intervention, which a lot of those articles talk about that I've just shown you, then the market will remain on the highs. So interesting times to say the least. Now in the daily chart, we've got some weakness that we can see here. The market is struggling at the 76% at the 21,045, and in fact the 21,000 has been broken again, and this is a crucial area now at the 20,888. Market needs to stay above this, and if not, then watch this area here. Let me just draw this one in for you. Just there at 20,845. Watch this area if the market breaks, because the last time we got here, you can see how they brought the market back. We've got Macron's win there, weakness yesterday, and we've got weakness on the overnight at the moment as well. News wise today, all we've got is crude oil inventories. I think that's out when the market's trading, and that's going to be putting in appearance at 3:30 usual time. It's become a bit of a non-event actually. I know they're still rated as a high impact news item, but to be honest with you, it's not really, unless they want to use it. It used to be very volatile, as I've said many times before, because of the 70% drop in crude oil prices during 2015. And then finally, the implied volatility. This moving slightly higher yesterday, as we've got a bit of a down spike towards the end of the session, so at 8:44. This one can't be manipulated like the VIX, where the VIX is the one that's got a futures market that they can actually sell into to force the volatility down to then give the stocks a lift. The implied volatility is based on a mathematical formula of future potential risk, so it's a lot more difficult to actually fudge, as opposed to the VIX, which you can actually, as I say, sell thousands and tens of thousands of VIX contracts in there to move the price lower, to give the appearance that everything is fine, all is well, and there's no real risk of the market collapsing. So I think that's it for this morning. Let's wait and see what happens. It is going to pick up. It always does. This is, again, it's got that sort of eerie feeling of 2007, 2008. You can see the VIX levels are down to 1993, 2007, and both of those occasions when the market got down to that level, we saw something major follow through. It could be end of the summer before we do. We could stay in this sort of sideways action again until the central banks stop their intervention. They always do, because they can't keep printing and printing and handing the debt on to the taxpayer. So they will stop at some point, because they know that, as history shows, there has never been a single occasion where the central banks have been able to dominate the markets exclusively over the long term. The market's bigger than that. If the institutions decide to sell, they will do. And also keep in mind, if the market stays like this now, what returns and what bonuses are the big traders going to get? They're going to get nothing. You see, the natural cycle of the market is you bring the market up, the general public comes in, you offload to the general public, and then you buy back in when they all are fear-ridden, want to get out, don't want to lose anymore, and then you bring it all back. And that's how the cycle's been since the stock market had its inception hundreds of years ago, and that's the way it will return. But of course, not until the elite and everybody else have offloaded their positions and the central banks stop intervening. But certainly interesting times, and we're going to see a lot more going forward, even though it doesn't seem like there's a lot happening. behind the scenes. It's a bit like a volcano, really. It's getting ready to erupt. A lot going on underneath the surface, so it's a matter of being aware of that. And as I've often said, it's forewarned, forearmed of what's likely to come. And unfortunately, when you're in this situation, I'll give you the heads up now, you find that the volatility explodes, and then you'll be getting price bars of 100 points as opposed to 5 or 6 that we're seeing at the moment. And it's just as difficult as to do nothing, is to try and get in those. But hopefully the central banks will ease back slowly and allow a sort of a controlled descent, if that's possible. But we'll have to wait and see as going forward. But at the moment, low volatility remains. Will they actually manage to force the VIX down to a new record low? I would imagine that they will find some reason to do so. Right, that's it. I will be in touch if there's something to report. Other than that, thanks for watching. See you in the next one.